Welcome back to the Eric Krown Crypto channel. Wishing you a happy to start to nice macro Sunday morning over here as we're about to get ready to prepare some very, very long-term charts. The question of today's video is going to be what to essentially expect over the next few months coming into May, June, July. I'm sure many people have heard this saying that is sell in May and walk away. So we're going to be actually addressing that question specifically with statistics. Is that relevant or not? What essentially to be looking for, or what essentially is the most likely thing to be happening based off the past probabilities. Other than that, I want to once again give the spotlight to the good old Bybit promotion going on right over here, as they are offering 0% on maker fees for derivative contract orders, which is actually like a really fucking good promotion, to be quite honest with you. Plus you can even get the Jewel Light for free for the first 30 days if you follow the directions in the link in the description below. All right, sweet. Let's just jump right into it. Starting off right over here with the old rainbow chart, the old rainbow stock to flow indicator chart. It's a little bit of a meme chart, but there it is going to play hand in hand with the next portion of the analysis. So starting off nice and easy, and as you can see, Bitcoin has been working within this blue zone for quite some time now. In fact, anytime that we have seen the blue zone printed in the past, that has essentially been indicative of the macro lows being in, and Bitcoin flipping around from that more or less bearish period, or not more or less, like very much bearish period, to a transitionary period where, you know, obviously the next moves to the upside, but what we're generally looking at is a long-term sideways range, which is where I believe we're at right now as it transitions from blue. It's the rainbow chart is transitioning. Holy shit. Transitioning from blue to magenta, who, just, God. My mind is running wild with the possibilities of things that I should not say on fucking YouTube. Anyways, let's just get off this damn chart. How about that? And go into a much more, much more desirable chart. God damn it, I did it again. Sorry, that has absolutely nothing to do with the damn rainbow shit over there. That has nothing to do with the highly esteemed rainbow stuff over there. What I want to be talking about right now is the past halving dates and looking at statistical relationship between the time from the halving to about 1 year beforehand. And as you can see, all the green vertical bars represent past halving dates, and this one over here obviously represents the estimation of the one that's coming up relatively soon. Relatively soon, like in 1 year, basically, about 1 year. But anyways, in the past, we have seen a nice relationship emerge. If we go all the way back to the genesis here, we can see the first halving date in November of 2012. And about 1 year before that, in fact, exactly 1 year before that, as we are over here on a monthly, let me actually go to a weekly. I think this would be a little bit better. But you can see on the weekly right here, it was literally 52 weeks before the halving date where Bitcoin essentially broke its long-term downtrend coming off of the parabolic blow-off highs over here, and then entered into, again, that sideways period where that first major move to the upside came exactly between the 0.5 fib, technically not a fib, but they're not 0.5 and the 618 fib right here. So somewhere between there, and then of course, entered into that sideways chop, putting in those higher lows and then marching onwards and upwards into the actual halving date itself. And that's where all hell broke loose, or all heaven broke loose, because I guess most people would probably be quite excited about that. So why would we say all hell broke loose? I don't fucking know. Anyways, yeah, so moving on to the next one over here. I did want to also denote this one in the same way. The 2015 saga, where there was a halving date in July of 2016, 54 weeks before that halving date, similar to this one over here, which was 52. You can see that Bitcoin broke the long-term downtrend. Yes, it was retested at some point. Doesn't necessarily mean it always has to be. This one over here certainly was not. But ultimately, in this one, once it was broken, first maybe moved to the upside, chop sideways, and then upwards and onwards throughout the rest of the rally. And then, of course, on this one, again, that first major rally finding its way somewhere between the 0.5 and the 618 fib right here, as you can see. So again, rather interesting, I would, or at least in my opinion. Anyways, moving on to the next one, the halving from 2020, again, coming in on May, 58 weeks before that, Bitcoin, again, breaking that long-term downtrend, goes on a nice phenomenal run, as you can see. And of course, after that, the old Rona dump happened. But again, it was generally, if you pull out, when in doubt, pull out, just a nice sideways period on the macro scale. And again, this rally actually finding its way well above the 618, in fact, a lot closer to the 786. But again, all these like first push rallies did make their way above the 0.5, which I thought was rather interesting right there. Anyways, the reason why I bring this one up is because Bitcoin is about 1 year away from the halving. And as you can see, when Bitcoin actually broke this last long-term downtrend over here, that was 66 bars. before the presumed halving date. So again, it is an estimation, but close enough. You know, it's probably going to be pretty damn close, if not right on the money. And so you can see a relationship between the timing of these sort of things, and then also we'll go over the actual results themselves. So in terms of timing, this one over here, 52 weeks. This one over here, 54 weeks, 58 weeks, 66 weeks, presumably. So that'd be, you know, we can see that it's an increasing relationship over time. So I'm going to kind of track in the future as well. But 2, 4, and 8. Okay, interesting. You know, seems to be kind of going up in that relationship. Anyways, if Bitcoin were to make it to the 0.5, I mean, it almost did. It pretty much did. I mean, it got to about what, $31,000. 0.5 is about 32. So yeah, not so bad right there. Let me actually get this. Let's do this exactly perfectly. Yeah, a little bit lower, but fair enough. You know, Bitcoin got pretty damn close right there. So, you know, would it be reasonable to say that Bitcoin has probably already played out that first move to the upside? It's pretty fucking close. It's pretty damn close right there. So that's, I guess that's a judgment call for you to be making rather than me. Now, also on the topic of the halving, which I would like to bring out over here. Where do I have it? Yeah, the halving breakout. So for that first major move to the upside, a couple things. So we're going to first measure from the breakout to the next major high, the amount of time that takes. And then as you can see on all of these past rallies, it doesn't just rally up, but it actually crashes down soon after that as well. So we're also going to be measuring that too. Again, you know, what I'm talking about is this first major move right here, and then this next major move to the downside right there. So in the case of that first initial rally, we've seen an initial average gain of about 140%. The past three halving dates, again, or the past three halving periods, or periods that we're analyzing right here, were 155, 102, and about 167% respectively. So, you know, you can see that all of those were pretty damn impressive. Obviously, Bitcoin has already or I guess it hasn't really had the 100% rally just yet, because that's not from the low, that's from the actual breakage. So let me just see where that would be. And let's see right about here. Where would 100% put you? That should put you in the low. Let me actually do it from the retest. There we go. Still about low $40,000 territory. Doesn't really change it all that much. But more importantly, the amount of time taken for that move on average was was how much? It was about 100 days. So we are rapidly approaching that 100-day point. As you can see, again, Bitcoin broke it over here. We are on day number 91. So, you know, again, putting the puzzle piece together, I do think that Bitcoin has had a pretty impressive run here. It is not, however, in the same context of the past ones. But as far as timing goes, and as far as as far as length goes, or at least to that spot 5 fib, as you can see over here, this could very well be the place. You know, that could have very well been the high for this rally, and Bitcoin's about to enter into a sideways and downside period. Ultimately, however, putting in a higher low. So I do want to come at it from the long-term perspective that most likely it's going to be an opportunity, at least based on the history of this. Anyways. After that, of course, we have seen over the average of the next 90 days that Bitcoin has had an average loss of about 40% or so. So again, it completely depends upon how, where this next high truly officially comes in. If it comes in from here, obviously 40% puts you all the way back down around 19,000 to 20,000 bucks. I think that's still worst case scenario. Again, there was some variance in this, and at the end of the day, there's only 3 past iterations, so there's really not much history that we're going off of. But a couple of those iterations in the 30%. One of them, big one, 50%. That was obviously the most recent one. But again, that wouldn't be out of the question. I still do think that worst case scenario from here, Bitcoin sees maybe somewhere down around 20,000 bucks. If this is indeed the high. Now we'll go over how to actually validate this as the high a little bit later within this video. But again, it wouldn't be out of the question. It wouldn't be out of the ordinary. But again, I would be looking at that presumably as an opportunity, long term. Anyways, moving on now. Let's get into the next chart. We can go over another fundamentally based chart. This is the MVRV. This is essentially the market cap versus realized cap valuations. And what do you need to know about this? Well, essentially it is this. Anytime that we've seen this one get into the green zone, the actual oscillator itself, the MVRV, get into the green zone and then bust back above the green zone on a closing basis, that has marked what? That has marked essentially not just the low is in, but the next momentous move to the upside is getting ready to begin. So you can see all these ones in the past worked out pretty damn well. Obviously, this happened many weeks ago in about the middle of February where we called it out. But I just wanted to follow up on it because, again, these things do take time, obviously. But good things take time, I suppose. Good things take time. And ultimately, this one would at least in my view, this one would still suggest that Bitcoin probably has some more upside, maybe in the more short term before that next major correction. It's kind of hard to make it out right here. But again, the big focus of this one is that any sort of major pullback would ultimately be an opportunity, whether that's 25,000, whether it's like 20, 21,000, or maybe where Bitcoin is at right now, it would ultimately be an opportunity based upon this, suggesting that the low is in and that pullbacks are essentially to be looked at as higher lows. Anyways, moving on now, I wanted to address the question of the day, which is sell in May and go away. Is that accurate? Is that like a good statement to be making? Is that statistically like backed up? And so I've actually spent a lot of time looking at this because there's a few ways to be looking at this, right? Sell in May and go away can be taken in a couple different ways. It could be like sell on the 1st of May and just expect an immediate dump. Yeah, that does happen sometimes. It could also be, sell at the end of May and then go away. And, Bitcoin markets in general kind of set up for a summer correction. So I wanted to make sure that I was coming at this from a little bit more of a neutral perspective as far as the data goes. I've marked off all of the prior Mays here for Bitcoin. And of course, we have one coming up in about 7 days from now as April's wrapping up here. But ultimately, I did, for the purposes of this particular analysis, not take liberties with the way that I defined May. I looked at it as, look, if price action does not come down significantly after May, that it doesn't matter. And found that out of 13 prior Mays, only 6 of them really traded to the downside after May, like significantly to the downside, or at least went sideways. I mean, if we include sideways as well, then maybe you kind of put that 1 or 2 up. But again, 6 out of 13 is not even 50%. So is sell in May and walk away accurate? It's actually not very accurate. But again, it's like, how do you define this one over here? For example, May 2019, big move to the upside throughout all of May. June even made new highs, but after that, highs were in. Compare that with this one over here, May 2020. This one obviously, up. Bitcoin goes sideways after that, but just upwards and onwards from there. I would say that this is a complete failure for that statement. This one over here obviously did work. This one over here obviously did work. This one over here obviously did not work. Again, it's like, okay, made new highs in June, then came back down to test May, but like that you can't just sell in May and walk away. that would have been stupid. That would have been completely stupid. However, this one over here, I would say, was pretty damn good too. So ultimately, a little bit less better than half, in the cards there. So I would not just blindly say that sell in May and walk away is appropriate, or at least in any way, shape, or form, relevant to formulating a reasonable plan. It really doesn't take too much to back test this kind of shit for yourself, but it's very illuminating to see, what people will kind of perpetuate on the social medias without having like looked at it themselves. And in this case, I think it's quite clear that I wouldn't be able to make any sort of reasonable assessment just based off of, oh, it's May, just walk away, just fucking sell. Yeah, so 6 out of 13 were down, or at least sideways and then down, so something like that. Anyways, moving on now. Should we go back to this chart? Do we want to go over the Bitcoin versus money supply 2 chart? It's honestly really not that great of a chart to be quite frank with you, but it is kind of funny to show the bears, because it does show that maybe they already got their $12,000 price action. But now we'll sidestep that one. We don't need to pick on them any longer. It's okay. It's okay. In fact, I don't even have it up right there. So let me just do it right here. M2. There we go. What do you know? You can see that when Bitcoin officially hit $15,500 versus US dollar, if we include the money supply 2 chart, yeah, it actually did get down around to where I think a lot of the price action people were looking. They were looking for, you know, correction somewhere what would be akin to like 12,000, 10,000 bucks. You know, fair enough. Kind of actually similar to what we did see back in 2013 and 2015 right here, but I don't think that's a topic really worth covering. It doesn't really help the overall view. Anyways, what would help the overall view is, and kind of, you know, looking back to an earlier portion of this analysis, is how do you actually know if this is the current correction that's going to be going on right here? Well, I think the easiest way, you know, it's maybe not the best way, but the easiest way, the most streamlined, simplified way would be to be looking at the weekly Gaussian channel yet again. And as you can see, as long as Bitcoin is above the mean band, that same mean band that was really fucking mean and rejecting Bitcoin for the last year or a little bit more than a year, as long as Bitcoin's above it, no, you know, corrections down to it, I completely fine in the short term. But no, that would be inconsequential. By the same token, closures below the mean band, well, at that point, it's certainly not out of the question. In fact, it's very reasonably looking somewhere around the bottom side of the Gaussian channel, which at current moment is about 21,500 bucks and is moving down over time. It's moving down. So if that were to happen, then yes, I'd be looking for somewhere down around there, and we could, you know, go from high to low. That would be about a 30, you know, about a 30% correction from the current high. Let me just see what would down to 20,000 look like. Yeah, that would look like 37,000 or 37%, which going back to this analysis over here with the halving corrections after that first major move to the upside would actually be very much in alignment with the first two ones at 37.5% and 39 and a third percent. So I did think that was rather interesting right there. It also even plays hand in hand with the 2-day time frame setup over here, but I don't know if we necessarily want to go over that today. Maybe we save that one for tomorrow. But again, you know, if that were to happen, yeah, somewhere down around low 20,000 bucks, quite likely and reasonable, and also probably going to be a higher low. By the same token, as long as Bitcoin is above it, you know, corrections in the short term down to 26,500 bucks, I think are fine. But we should be looking for bounces there first and foremost. It's not until we see actual closures below there where I'd say that it's officially broke. And let's just call it like 26,500 bucks on a weekly time frame. You know, until that happens, Bitcoin more likely to kind of play sideways within this region and maybe make another move to the upside. Similar to what we did see. Let me just. Do we have any good examples right here? Yeah, we have a good example right here. You know, Bitcoin obviously busts through the mean band after being away from it for a long time, tests the top side, comes back down, tests the mean, and then back upwards and onwards. I think that this could very easily happen in our current trajectory. Similar-ish thing over here, I guess. And this one just busted on through the whole damn way. So not really much to make out of that. I think the 5-day has a lot more iterations within this particular one. Obviously, it's a different time frame, but same sort of interpretation in the sense that, hey, yeah, you can break above the mean band right here and spend a lot of time consolidating within the top end and the mean. And, you know, as long as you don't break below it, you know, wicks below are fine, but no closures below it. Well, I don't really have a reason to be bearish just yet. Or like bearish, you know, looking for like major moves to the downside. So going back to the weekly over here, that would be kind of a pretty damn good way to summarize the current analysis. It's like, hey, yeah, there is potential for major downside, but it's not confirmed just yet. As long as Bitcoin's above 26,500, I don't look at that as relevant. Below 26,500 on a weekly, yeah, fuck yeah. I mean, coming down to like 20,000 bucks, completely fine. But I would be looking at that as an opportunity. Until then, you know, I'd be looking for Bitcoin to play between that range. And well, all prior times where we've seen Bitcoin bust through the mean band, every prior time where we've seen it close above the mean band after being away from it for a while and also turning red, it's gotten not just free ride to the top side of the Gaussian channel, but it's also busted on through for a pretty impressive rally, actually. So this would be a bit of an anomaly, is what I'm trying to say. If Bitcoin actually did come back down, close below here, and then come all the way down, it would be more likely based off of the history to, you know, maybe make that move down there. Yes, put in a wick, trade sideways for a bit, and then bust through to the upside, and play out, you know, a greater move into the deeper $30,000 territory, somewhere between maybe like 38, maybe even low 40s, still overall, because it is interesting right now. And tell me if you agree with this. because we're all kind of stuck in our own echo chambers. But it does seem to me that most people, maybe not most people, but more prominent people maybe on Twitter are more vocally bearish right now, or more vocally bearish as Bitcoin basically gets its first major down week for a while, So, not the best way to be doing analysis, but I did think that could be of interest. Anyways, I think that's a good place for me to be leaving off on this particular one. Just the easiest chart right here to kind of be looking at the current trajectory as far as the long term goes. If you do see Bitcoin again below 26,500, I would be expecting a greater correction to come into the market. Whether it's like May, June, July, something like that, most of summer. Until then, I need to see closures below there before personally I get bearish for that greater move. Obviously, we're looking for a pullback this week. Now kind of more looking for a bounce within this region. In fact, we're kind of getting a short-term bounce right here. But I do think that I do think that Bitcoin very likely will test somewhere around 26.5 and then probably bounce from there. That's my personal view. Not that necessarily matters. Anyways, at the end of the day, as always, I'm going to be wishing the best of the best. Take care, much love, and see you hopefully soon.